welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. Allow me to add, first of all, some toolbars here. Charts. And for the line studies, as well as the time frames. Okay, that should be it. Yeah. Now, slowly but steadily, the summer holidays are reaching an end. Okay, that may not be as pleasant as for some, but still, that's the case. And we may say that the markets are slowly but steadily, practically restarting the engines. I think that the Jackson Hole summit over the past few days, up until the day before yesterday, on Saturday, was exactly signaling this restart of the markets. Mind you that the messages coming out from central bankers tended to be leaning more towards the hawkish side, but overall there was an understanding that more or less, okay, progress has been made on the inflationary front, but inflation rates tend to remain still quite high. And I think that if the Fed and a number of other central banks, say for example the ECB and BOE, may continue having a rather vigilant stance and more or less continue to be more leaning towards the hawkish side. So there may be some few rate hikes more, however, that's a little bit uncertain. In any case, though, definitely the central banks are going to remain on a standby basis. It's characteristic that the market is still trying to digest the message sent by Fed Chairman Powell that rates are to remain high and for a prolonged period of time, maybe even be raised a little bit further. And I think that was the most characteristic element of the summit as such. Now, we have in front of us the US dollar index. First of all, let's add USD index so we can see clearly what we're talking about in black. Let's drill out to the daily chart, and we can see that there is a continuance of the upward movement despite some hesitation. Back to the 4-hour chart, daily chart, lowering it a little bit. 4-hour chart. All charts to be presented are to be of the same time frame, the 4-hour time frame, unless otherwise stated. There's a clear upward movement of the US dollar despite some hesitation. Nevertheless, we have to note here that the index has broken two resistance lines and has stabilized just below the third one, which we will be lowering a little bit. We definitely have to go hunting for new resistance levels. So let's turn the previous resistance levels into support lines, given that they have been broken and the role has been switched from the resistance lines to support lines. Let's go find new second and third resistance levels. Have to go way back. Okay, one's here. That's pretty clear. This peak is very, very characteristic. Let's go further back and find another one. And I would be going on this one for the third. Should be great. Let's readjust the chart, widen it a little bit, and let's start digesting. Starting with the R3 at 106, 107 to be exact. And color this in red. Okay. Sorry. Let's place a label as well. Color this in red as well, as it is a resistance line. Done. Okay, the letters could be a little bit smaller. Second resistance line at, let's have a look, 105.45. First resistance line being set at 104.35. First support line being placed at 103.15. In green. Second support line at 102.20. And the last support line at 101.20. That's it. So, what we note here is, first of all, that the US dollar index has hit a ceiling over the past two sessions. I would be saying the American session Friday, but practically that could be even the early European session, at the 104.35 resistance line. On the other hand, the bullish tendency seems to remain present, and that's indicated practically by two events. The first is that the upward trend line has not been broken. It has not been even tested. The second would be that the RSI indicator below our chart remains above the reading of 50, implying some bullish tendencies within the market. So for the time being, we tend to remain bullish, but for the bullish outlook to be expressed, we would require a higher peak than this one. So practically the 104.35 resistance line has to be broken, and the price action has to start aiming for the R2 105.45. On the other hand, possible stabilization of the index, I think, would be more clearly signaled should the index retreat, drop, break the pre-mentioned upward trend line, yet respect the R1 and the S1. So that would imply movement like this. For a bearish outlook, I would require the index to drop, once again breaking the upward trend line, exactly signaling that the upward movement has been interrupted. But I would also require it to break clearly the S100 3.15 and start aiming for the S200 2.20, nothing less. That may also drive the index far lower and the RSI indicator below the reading of 50. And I think that would be more indicative of bearish sentiment in the market. Let's have a look at Euro USD. Nice downward motion. Like this. We are still in the 4-hour chart. Excuse me. Okay, let's start converting the resistance lines, the support lines into resistance lines, given that they have been broken. I would like to proceed with some readjustment here. Definitely this has to go higher. This one as well. And let's start hunting for new resistance levels, support levels. Opening the chart, unlocking it, going back, back, back. And I would be noting one support level here. You can see this trope being repeated. And another one here. Once here, second here. It's a little bit far-fetched. Yeah. Could go narrow here. You can see it also being repeated once, twice, and once here, 3 times. Possible S3 though would be far, far narrower. Anyways, let's readjust the chart. First of all, let's index it. Place it. Let's start labeling the support and resistance lines. Starting with the R3 at 1.1035. In red. Moving now to the S3, which is being placed at 1 point. Give me a sec. Cancel. 1.0945. 100 pips, 90 pips lower actually. The S1 being placed at 1.0850. Could be a little bit higher. And I would be marking this peak here. We're talking about an area actually, and it's at 1.087. Feel free to send us any comments or any particular trading instruments you would like to have a look at. We would be glad to actually have a small technical analysis on it. Starting with the support lines, and the first one would be the 1.0765. In green. The second support line is being placed at 1. Let's have a look at that again. In green, that should be as well 1.067. $1.0575, sorry, 1.058. That's it. So we have practically two elements supporting the idea of a bearish outlook. The first would be the downward trend line. And the second would be the RSI indicator, which tends to remain below the reading of 50. Yet for a bearish outlook, we would require the pair to drop below the S1 1.0765 and start aiming for the S2 1.0670. So there has to be a continuance of the downward trend line following it and allowing the pair to drop below the S1 and start aiming for the 1.0670. Definitely a lower true than this one is required for a bearish outlook. On the other hand, note how the pair has hit a floor at the S1 and stabilized just a little bit higher. Should that be maintained, we may see the pair breaking, if not testing, then breaking the downward trend line, yet remaining between the R1 and the S1 in a sideways motion like this. And that would be signaling exactly this, that the downward trend line has been interrupted and the sideways motion prevails. Should the pair be able to break the downward trend line, but also break the R1 and start aiming for the R2, then we would be talking about a bullish outlook. Nothing less though. And definitely we need a higher peak than this one. Okay, let's have a look at GBP/USD. Let's start labeling it. You can see that there has been a downward motion. Let's draw a line to it. You can see that the pair has also started to reach a floor here. Definitely this has to be turned into a resistance line. It has been broken. And let's go hunting for a new ultimate support line. One here, the next here. Pretty narrow actually. There's a middle level here. You can see it on the peaks and troughs. Let's zoom it out a little bit. Seems good. Okay, let's readjust. Widen the chart a little bit. That's better. Setting the S3 at 1.23. Locking it in. Second support line at 1.2440. That's too much, sorry. That's better. 1.2435. Let's have a look if it actually creates a touch. One touch, it's good. Second touch, okay. And to the downside, one touch, second touch, we're clear. Readjusting the chart. First support line at 1.2540. Moving now to resistance levels. $1.2675 being the first resistance line. Let's confirm this once again. Yep. Second resistance line 1.2780. Sorry, that should be 1.2790 actually. And final resistance line being set at let's have a look. 1.2945. People in research just got the notification, just suggested that the R3 could be set lower at this level. It's a possibility, but I'm going through. Okay. So for the time being, we tend to maintain a bearish outlook as long as the downward trend line remains dominant for the past price action. Also note how the RSI indicator is quite low. It's currently at 36.3, which is actually pretty low, implying a rather bearish sentiment on behalf of the market. And I would expect GBP USD to break the S1 1.2540 in the next 24 hours and start aiming for the S2 1.2435. On the other hand, though, there seems to be some stabilization after the pair aiming, but not testing the 1.2540. And should the pair stabilize as such, then we may see it breaking the downward trend line and remaining between the R1 and the S1. Should the bulls take over for a bullish outlook, I would require the pair to break the downward trend line guiding it, to once again highlighting, or if you prefer, suggesting the interruption of the downward movement. But I would also require the pair to break the R1 1.2675 and start aiming for the R2 1.2790. It's interesting how the level, the R2 provides resistance once, twice, 3, 4, 5 times. Support aimed for here. It's pretty valid. Okay, let's move now to USD/JPY. Readjusting the chart. The first resistance line, the R1, has been broken and now has been turned to support. That forces us to search for a new ultimate resistance level. Okay, there is a plateau here. On the other hand, though, this could widen a little bit. The R2. And the R3 being set even higher. This peak here. We could also widen the support lines. Practically, this could go as low as here, and this could go here. Seems good. You can see the repeated tests on this level for support, and this true here, as well as these peaks, suggest the seriousness of this level here. Okay, let's readjust the chart. On the other hand, the S1 could go lower. I'm keeping this. Okay, let's place the labels. $151.90 would be the final resistance level. Second resistance level at 149.40. Second resistance line set. Now moving to the first resistance line, which is being placed at 146.65. And we definitely have to correct the R2. Give me a sec. Let's lock everything in here. Let's move to the support lines. S1 at 144.60. S2 at 142.20. Let's verify that though. That's 142.25. And last support line at 140.50. That's it. It's interesting how exactly the pair is currently testing the R1, a level which provided resistance beautifully here. Note that all this upward motion here was interrupted at this level exactly. So that's pretty valid, and it's going to be interesting to see whether the pair will be able to break it and continue higher, starting to aim for the R249.40. In that case, I would be switching our bias for a sideways motion in favor of a bullish outlook. And there's another factor which tends to support a bullish outlook here. And that would be that the RSI indicator is nearing the reading of 70 dangerously. So practically, the bulls may have it, but in order to adopt a bullish outlook, I would require the pair to clearly break the R1, nothing less. Should the pair, though, experience difficulty in actually breaking clearly the R1 and start correcting lower, as long as it remains between the R1 and the S1, like in this case, then I would be maintaining a sideways motion bias, and that would be something like this. We're talking about a corridor of around 180 pips. Sorry, 200 pips. And I think it's pretty wide. The main question here is whether the price action will be able to push USD/JPY higher than the R1 or not. For a bearish outlook, I would require lower true than this one. And practically that would mean that the pair would have to drop, break the S1 144.60 and start aiming for the 142.25. For the time being, that seems to be a far-fetched scenario, given also the dovishness expressed by BOJ policymakers over the past few days, as that tends to weaken the JPY side of the pair, allowing USD/JPY to rise even further. Mind you that the US dollar had edged a little bit lower. That's not the case against the JPY. In general, yes, but in USD/JPY, the USD was allowed to continue higher. Okay, let's have a look at AUD/USD. Readjusting the chart. Interesting how the pair has hit a support line at 0.645. Let's go hunting for a new ultimate support level. Definitely this can go a little bit lower. Note this peak here. This could go a little bit higher. Let's have a look at that. Unlocking the chart. Have to go way back here. And I'm going to be recalibrating the resistance lines. Readjusting it. You can see the double top here. Once, twice. I think I'm keeping that. There's a nice peak here as well. Good. Okay. Could this go a little bit lower? I think it could. Could go even up until here. Note how it was tested once, aimed for here, tested. I'm holding it. Okay, let's correct also the labels. Starting with the 0.6730. The R2. Now that has been lowered. Again higher, sorry. At 0.6610. Come on. The R1, which it's a boundary, the upper boundary of the current sideways motion at 0.6490. Let's move also to the support lines, starting with the S1, 0.6380. Second support line, being placed at, let's have a look, 0.6285. And final support line. Let's turn this into green. 0.6170. So what are we saying here? First of all, is the direction seems to remain in a sideways manner. And that's between the 0.6490 and the 0.6380. As long as the price action remains between the pre-mentioned levels, we tend to maintain our bias for the sideways motion to continue. Now, for a bullish outlook, we would require the pair to rise, break the R1 0.6490, which is being marked by this peak here, and start aiming for the 0.6610. On the other hand, should the bears take over, we may see the price action dropping, breaking the 0.6380 and start aiming for the 0.6285. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Some other traders that do not hold on to winning positions for as long as needed. Although some traders' winning trades outweigh their losing trades, they still have a poor balance in their trading account, as the losing trades are a lot bigger than the winning trades. These two cases are contradictory. However, this is usually the case when traders don't have a clear picture of what risk management is. There are 6 common ways to fix the situation. A stop-loss order determines the point at which you should exit a position after reaching the maximum loss you're willing to take. Risk less than 2 to 3% of your trading account in total. Beware of the risk-reward ratio. Do not exceed the size of your account. Diversify your positions is another good solution. Also, try to trade positions that are not much related. Last but not least, go with the trend and control your emotions. We hope you enjoyed this video. Stay tuned for more.
My name is Desmond Leong. I run an award-winning research firm, our Everest Fortune Group. We are finalists for Best FX Research and Best FX Research for 2019, 2020, and 2021, and also Best Equity Research for 2020 and 2021. Right, so we got a whole bunch of awards. We got a strong team of traders over here. Over time, you'll be seeing me. You'll be seeing this other girl called Cassandra. You might be seeing this other girl called Annabelle. Right, they'll be all coming in and sharing webinars on different levels. Right, but for today, you have me. Right, and I will be teaching you. I'll be guiding you on how to be a better trader. And as you can tell from my picture, from my video, I'm not that old, right? Pretty young guy, right? Trading full-time for a living, right? Running an entire team, entire prop trading firm here. And if there's any word of encouragement I want to share with you guys, is that you don't need to spend 30 years, in Bloomberg or in the industry just to be a good trader. You just need to spend 30 days learning the right stuff to be a good trader. Okay, you don't need 30 years, you just need 30 days learning the right stuff. And the thing about trading, right, I just want to set the tone for all of us who are beginning this journey together with me, right, is that trading is very different from the world of academia, right? So, when we're studying, when we go to schools, right, when we go to class, right, when we take exams, right, how much we study usually is directly positively correlated with how good we are going to do, right? The more we study, the better we do. It is very, there's a correlation there. And therein lies a problem with trading, because a lot of us who are good at studies, right, they think that, all right, we are good with studying, so we should ideally be good with trading, right? The more I read on Baby Pips, the more I read on Forex Factory, the more I'm going to trade better. Right, but that is far from the truth, because in the world of trading is very different, right? You need to throw in your emotions, right? And you need to learn. You can learn the right stuff, and equally, you can learn the right stuff. And the scary thing is that you can learn the wrong stuff. Okay, you can learn the right stuff and you apply it wrongly, and you end up losing money. Right, so that's how trading is. It's very different from the world of academia. We cannot associate knowledge with profitability. Okay, we cannot associate knowledge on how to trade Forex, all the different trading strategies, all the technical indicators, stochastic RSI. We cannot associate that with being a good trader. Okay, I can teach you a very advanced stuff like Elliott wave, right? I can teach you Elliott wave. Right, but if you try to apply it to a different style of trading, like maybe apply it to a single instrument, you're not going to make money, because Elliott wave requires you to look at the correlation of all the markets, for example. Right, so it's a very, very dangerous thing that we're looking at over here. In trading, you need to learn the right stuff, and you must avoid learning the wrong stuff, and must avoid applying the wrong stuff. Okay, and in this webinar, I'm just going to share with you my journey. You know, how I've went from literally nothing to being a good trader. Right, it took me over 7 years. I learned the right stuff, I learned the wrong stuff. Right, I blew up many accounts. Right, and how I finally reached a stage where now, you know, I run an entire prop trading firm, you know, trading profitably. Right, I learned from the best previously. I'm going to share these things with you. I'm a heavily technical trader. I mean, I focus a lot on technical analysis, right? And I'm going to share and try and impart as much of this knowledge as I can to you. The scary thing I do want to share with you is that most of what you find online, right, it's not the right stuff. Amazingly, it's not the right stuff, right? You might find stuff on Baby Pips, you know, Forex Factory, you might find stuff, this Investopedia, right? They have an interpretation of, for example, how to use a very simple stochastic indicator, but my take on it is very different from it, right? Because I found that a lot of what the world teaches tends to be from the wrong point of view. It's a very retail kind of point of view, right? I'm going to share with you from an institutional perspective, right? How we look at technical analysis, how we look at fundamental analysis, how we look at trading strategies. We're going to debunk a lot of different a lot of different approaches to trading. Like, a lot of people like to use a fixed stop loss and take profit, but that is the worst thing to do, for example, right? And I'll be sharing with you that in the upcoming webinars. I'll be showing you how to get access to it in a bit, right? But if anything, I just want to set the tone for you guys that, you know, you don't need 30 years to be a good trader. You just need 30 days learning the right stuff, right? And we have a very special partnership with IronFX where zero compromises and bring you guys the best education you can get, the stuff that you probably need to pay a lot of money out there, right? A couple of $1,000s just to go through, you know, bring it to you guys. Let's make this fun and interactive. There's a chat section there for you guys. If you have questions, I recommend ask them right away, right? I literally have another screen open over here. I'm monitoring the chat that is coming through. Right? I'll do my best to answer them when I can, right? Because usually by the end of the webinar, we hardly have any time to answer any of the questions, right? So if you have anything that pops up halfway through, just send it through, all right? Now, let's begin to this session, right? What is the agenda for today? A few things we're going to touch on, all right? Introduction to the world of trading. You know, what exactly is Forex, right? I'll be showing you a little bit about my take on it, right? Explaining it in very layman terms for you guys to understand, because honestly, I am not a big fan of I'm not a big fan of jargons, right? I'm not a big fan of making things complicated, right? The big words out there. I like to keep it simple, and I want to show you that, you know, if we keep it simple, you know, it's very simple. Trading can be very simple. All right. So be filtering through the noise of jargons, you know, and then we're going to answer some key questions that many people usually have when it comes to trading. You know, how much time do you need to trade, right? Do you need to trade 8 hours a day, right? Do you need to trade 4 hours a day to be a good trader, right? What kind of trading strategy is the best trading strategy? Scalping, day trading, swing trading, you know, what kind of strategy is the best, right? How much time do you need to really master trading? You know, and how do you go about mastering trading? Is there a step-by-step plan, right? I'll be sharing with you that later. Very exciting stuff. Which products should you focus on? IronFX offers a lot of products to trade, right? A whole wide range of them, you know, FX commodities, indices, right? So many of them. But what products should you focus on to trade, right? And you know, what trading strategies work better for which products? We'll be touching on it later, right? But if you have questions, shoot them right through. All right, guys. And then lastly, you're going to touch on, if you have time, you know, different approaches to trading. Okay. Now, let's continue on to the session. Okay, bear with me. Sometimes I talk too much, I talk too fast, and so I lose my voice, right? Okay, let's begin to the session, all right? So what exactly is Forex and how does it work? So the short answer to this is that Forex is actually, if you think about it, right, now that the borders are open, I'm not sure which countries you guys are from, right? But now that borders are open, we might be traveling around. We might be traveling around a bit, and the places that we're going to see is we're going to see the money changers, right? There are so many money changers around, and that's the amazing thing. Forex is essentially just like money changers, okay? It is exchange of currencies from one currency to one foreign currency, right? Well, foreign currency to foreign currency, right? Local to foreign currency. It's basically, you know, what is Forex? It's just foreign exchange, right? Now, taking one money and giving it to another person. Let me put it into a form of an example of something which we might be very familiar with, right? Because maybe I'm exchanging some money to go on holiday, right? So let's talk about scenario over here, right? Maybe I'm in the US, right? I'm in the United States, and I want to go to Japan. Okay, I want to go to Japan, right? I have $1,000 with me now. Okay, I have 1,000 USD with me. Okay, 1,000 USD. I go to the money changer and I get $100,000 yen, right? $100,000 yen, as you can see over here, right? This is before the holiday. Okay, I go on a holiday, right? So I'm now in Japan, right? I'm going to Japan. I'm on holiday. I'm eating sushi. I'm eating my sashimi. I'm eating my well, not wasabi, right? Just eating all the different food I have, right? Eating all the different food I have, having my time of life in Osaka, right? And now I come back from the USA, right? No, I come back from Japan and I come back to the USA. Okay. Before I went to the USA, before I went to Japan, one USD equals to 100 yen. One USD equals to 100 yen. When I come back from the Japan, now my one USD is equals to 110 yen. Okay, I still have my yen with me now, right? I have not changed it back to USD. Okay, I have not changed it back to USD. Guys, if you can, you want to try it, take a shot, right? I can see Donald raising his hand, right? Did we make or did we lose money? With one USD is now stronger. One USD is now worth 110 yen, right? And we just came back from Japan. We want to change some money, right? Did we make or did we lose money? Anyone want to take a guess, right? Anyone want to take a guess whether we made or we lost money? Right? I know it's you guys can send me the answer, directly to host and panelists. You can send to everyone, right? It depends whether you want to show it everyone, you want everyone to see it, or you want to send it in the. I noticed some of you guys in Q&A. If you want to send it in the Q&A, that is perfectly fine too. All right. But what I want to share with you guys is that what happened basically is that the USD strengthened, right? The USD strengthened. So now previously your one USD, right, is worth 100 yen. Now your one USD is worth 110 yen. So you can get more Japanese yen with a single US dollar. Correct? You can get more Japanese yen with a single US dollar. But the problem with this, so that means the yen is weaker and the USD has strengthened. In this time where we are away in Japan, the yen has, it has weakened and the US dollar has strengthened. The problem is that we have yen, right? Hey, Kakana, nice to see you tuning in from South Africa. Welcome, right? Thanks for joining us, right? So yeah, the problem is that we have the yen, so we need to convert it back to USD. And because the yen is now weaker, right? That means, we can exchange it for less USD. So even though our base currency, we feel like, oh yeah, USD has strengthened, but if we were holding on to the wrong currency at that point of time, right, we end up losing money. Okay, so in this particular scenario, we have lost money, right, because we're holding on to the yen. However, if you think about it, it's very close, However, when we came back, right, while we are coming back, before we reached back home, we converted the yen, right? We converted the yen to USD, and by the time we came back, then it strengthened. Then we have made money, right? So this is very time sensitive, right? The whole concept of foreign exchange, is very time sensitive. Okay. Now, all right, Darlington, nice to see you guys tuning in from Nigeria. Welcome to the webinar, right? Nice to see you guys here, right? Hope you have a good time, right? A good time. If you have questions, remember send them through right away. I can see your messages come through, right? So I'll do my best to answer them all along the way. All right. Now, right, Cyril, nice to see you guys. Nice to see you from South Africa. Well, a couple of guys from South Africa. I'm just curious. I can see quite a number of you guys in this webinar. Could you guys share with me which countries you guys are tuning in from, right? And if you want, you can guess which country I am from, right? So I'm pretty sure not many people can guess which country I'm from, right? But But yeah, it's you can share with me which country you guys are from. That'd be pretty awesome. Okay, right. Wait, is it Natalia from London, UK? Oh, that's great. That's great stuff, man. Welcome to the webinar. We have another person from South Africa, right? Mokonoto, right? Quite a number of you guys tuning in from South Africa. That's nice, right? So anyway, I'll just slowly continue on the webinar, right? Feel free to chat in the chat panel, okay? Now, deciphering jargons, okay? One thing I want to do, right, is I want to decipher as much jargons as possible, right? And if there's any jargon which you guys are not familiar with, send it in the chat session. I will do my best to answer them, right? If there's any stuff that you might have encountered recently and like, man, what does that even mean, right? Just send it. I'll do my best to answer it. Right, Carlos from Oxford, UK. That's nice, man. That's nice. Right, we got Nutuli, right, South Africa. Right, Guva Mombe from Zimbabwe, and we got Fatima from Philippines. Oh, that's very nice. Now I went to Philippines a couple of years back. Yeah, I went to Philippines a couple of years back. I think went to Smoky Mountains or something, or some kind of a mission trip or something. Right. Yeah, it's Philippines, really nice place. Right, I love Jollibee from there. Right. All right, man. All right, now let's continue today's session. All right, deciphering some jargons. Okay, now okay, pips. Right, we always see people talk about pips. Right, like, hey, I made 10 pips, I made 50 pips. Right, in trading. Now, when you see pips, the only thing you need to know is that they are referring to literally kind of points. Right, so there are two kinds. Right, anything that ends with /JPY, right? So you can talk about AUD JPY, USD JPY, blah 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 /JPY, and you can talk about all those that end with /USD or /anything else, right? Most of them, right? A pip refers to the 4th decimal place, right? This is a pip, right? This is a pipet, but people rarely say I made 1 pipet or something, right? People rarely say that, right? Most of the time people will say I made 0.1 pip, which is equal to 1 pipet, right? So when someone says, oh, price has went up by 10 pips, right? It basically means that price has went up, to 0.0010, right? This is 10 pips, right? The 4th decimal place. The 4th decimal place, each one is, 1 pip. So if it goes up 10 pips, it goes up to here, becomes 10 pip over here. For yen, it is the 2nd decimal place, right? Over here. So anything with a yen, if it says you go up by 1 pip, you're referring to the 2nd decimal place. If you go up by 10 pips, you basically means that it goes up to 0.10. Okay. Yvonne from South Africa, welcome. Thanks for joining us. Right. Very fun session, right? We are pretty fun session in this webinar. All right. So so people talk about long or short, right? Long means you're buying, short means you're selling. That's all you need to know. Okay. Long means you're buying, short means you're selling. That's all you need to know. Hawkish and dovish, it means 2 different things. Okay. Hawkish basically means that it's hawkish. People who are hawkish, they usually are in favor of currency appreciation. They want the currency to strengthen. They want interest rates to increase, right? And their objective is to reduce or kind of contain inflation, right? For people who are dovish, right, they are usually on the side of currency depreciation, meaning they want currency to get weaker. They usually want the interest rate to decrease, right? And usually the objective of doves is essentially to stimulate the economy. Okay. Now, that's all you need to know about hawkish and dovish. You see people trade around a lot, right? Usually it's just people who are hawks, they want the currency to strengthen. Think about hawks, they like to be very aggressive. They want currency to strengthen. They want to increase interest rates, right? Attract more. They want to increase interest rates, right? And people are dovish, they're milder. They want currency to depreciate. They want the interest rates to decrease. Okay. Now, lot size. Lot size is basically a lot size you use to trade. So when someone says, how many lot sizes do you use? When you trade, you're like, oh yeah. I put in 0.1 lot, 0.2 lot. They're just referring to, to MetaTrader 4, MT4 when you take a trade. Okay. Because the MT4, they use lot sizes to trade, right? Major, minor, and exotic currency pairs, very simple. Majors are anything with /USD behind. Okay. Or have a USD in it, like USD JPY, USD CHF, right? Anything with USD in it, we consider a major. I know it's a little bit biased, but but apparently anything with USD in it is considered a major. Minors are anything with like usually any of the other currency pairs, other I think it's G8 or G7 currency pairs, right? We're looking at the AUD, right? You're looking at NZD, you're looking at GBP, right? And also if you're looking at GBP AUD, GBP JPY, NZD, JPY, all the other stuff that doesn't have USD in it, we consider it as minors, right? So someone say, hey, sometimes people call it minors, sometimes people call it crosses, right? But sometimes when you hear people say, yeah, it's I'm trading, I only trade majors, I only trade minors, right? You're like, wait, why in the world are you talking about major or minor, right? It essentially just means this: majors, anything with USD in it; minors, anything which is more any of the other crosses, the major G7 countries. And exotic currency pairs are those that are a little bit more exotic: South African rand, right? Dollar ZAR, all these China yuan, right? All these different not so popular ones, right? We consider them exotic currency pairs. Okay. We talk a little bit about, there are three major sessions that look at: Tokyo, London, and New York sessions, right? These are the times when there's a little bit more liquidity, so to speak, right? London and New York overlap. We call it as overlap. Before the markets close, there's actually a time where they overlap. That is where there's a lot of volume, right? But that does not mean it's the only time to make money there. There are many ways to make money in trading. And today I'll be giving you the foundations of, giving you the foundations of how to do that, all right? Anyone who says bullish means you're going up, bearish means you're going down. Okay, simple stuff. Don't want to jump too much into it. Safe haven. Safe haven is basically, how do I explain it, right? Safe haven are places, are instruments where people flock to, when things are risky, right? You're looking for a safe place to go to, right? And that's what kind of safe havens are for, right? So for example, Russia and Ukraine war, right? Man, things are heating up. People are like, oh, could this be another world war? Right? Is this going to be rather scary? Right? If it's a little bit scary, what they're going to do is like, I think this is a little bit too risky for me. I want to put my money in a safe place. So what are these safe places, right? One of it is, of course, gold. When everything collapses, when all the world's economies collapse, if you hold on to a bar of gold, there's this gold does not have a country it belongs to. Gold is just gold. It's pure material. It's heavy. How much is worth its weight in gold, right? There's a popular saying: it's worth its weight in gold, right? So gold, is the safest so-called thing, safe haven. And then there are currencies which are safe havens, like the USD, right? Because people think the United States is so huge, there's no way in the world that the United States can collapse, right? So people think of the US dollar as a safe haven. People think of the franc as a safe haven. Switzerland, people think of Japan as a safe haven, right? People even think of the Singapore dollar as a safe haven, right? These places are very safe, right? Very safe, right? So safe havens, are basically places where people, when the going gets tough, when the going gets risky, right? It attracts a lot of attention. All right. Another thing that we look at is, of course, risk on, risk off. Basically, you just think about risk on, risk off. In a sense, like risk on means there's a lot of appetite for risky stuff, right? Let's go into Bitcoin, right? Let's go into equities. Let's go into Tesla. Let's go into the stuff that are a little bit riskier, right? But when people say risk off, right, basically means that you think about a switch, like you're trying to turn the switch off. Risk off scenario, let's play it safe, right? Let's go. What happens risk off? You don't have the appetite for risky stuff. You go to safe havens, for example. So you can see how they're related over there, right? Bid and ask prices, right? You sell that bid, you buy ask, right? That's basically the spread. When people talk about spread, it's the difference between the ask and the bid price, right? It's a difference between the ask and the bid price, bid and ask price, sorry, right? So this thing in between is called the spread. Liquidity, very simple. Liquidity just means how Liquidity just means how, how much volume there is in a particular kind of instrument. Okay, what I mean by that is, if you wanted to sell your iPhone, right? If you wanted to sell your iPhone, there will be a lot of, you go to any of these places where you can sell second-hand phones, right? You go to any of their and say, I want to sell my iPhone. There's easily a lot of buyers who want to come in and say, yeah, sure, I'll buy your iPhone. This is the price I offer you at, right? And the prices all tend to be pretty close to each other, right? So if you have a very popular product, like a major currency pairs, popular products, a lot of eyeballs on it, a lot of people trade it, right? Like an iPhone, you want to try to sell it, people can easily come and tell you like, okay, I'm going to offer you this price, and they're not going to differ that much from each other, right? But if you have a Nokia, right? You have a Nokia 3210, right? One of these old Nokia phones that you have, right? And you're like, hey, you go out there and say, anyone wants to buy my Nokia, right? People are like, what? Some of them might be saying, what the hell is that Nokia? What is it even, right? It's like, oh, it's a handphone. No one even knows it's a handphone, right? And then the prices, you get a lot less people coming up to you, giving you offers, right? A lot less people want to buy it. And even if people offer to buy it, one person saying, maybe I'll buy it off you for $50, right? Another person buy it off you for $100, right? So the prices differ a lot because there's less liquidity, essentially. Less people interested in trading market, less liquidity there. More people interested, right, in trading Tesla and trading euro dollar and trading this kind of big currencies, right? The more liquidity there is, the better your spread is. Okay. Last thing I'll touch on is slippage. Okay, slippage basically means when you want to enter into a trade, and the moment you press the button, right, when price might go against you or for you. Imagine, right, if your price is like falling, price is falling, right, and you decide, okay, I want to sell, right? You click here, sell here, right? Price can either go down or go up, right? So if there's negative slippage, it means that you got in a position that's not as good. You wanted to sell here, but you got in over here, right? Positive slippage is that you wanted to sell here, but you got in over here, right? Got in slightly better, right? So usually in trading, slippage is a common thing. Slippage is everywhere. Sometimes you'll be slipped. Slippage is positive. Sometimes slippage is negative, right? It affects both ways, right? But slippage always happen. All you know is that what slippage means is that when you enter a trade, usually it will there's a little bit of time between from the moment you press that button, the button, right, to the time you actually get into the trade, that little bit of time difference, right, that's where slippage can happen. Now, of course, if you want to reduce slippage, some of the things that you can do, get a good internet connection, make sure some people have VPS, virtual private servers, which the servers are closer to maybe IronFX trading servers, so there's less latency. I'm not sure if many of you guys ever played games before, but imagine you're playing a game, right? So they talk about lag, they talk about latency, right? So if you are playing a game and you're playing against this person who is on the other end of the world, right, and you two try to play together, right, it becomes very slow, right? You do something, it takes him a few seconds before he sees it. He does something, it lags a bit before you see it, right? So, but then if you are playing a game and you're right there beside, your friend who is playing right beside you, you're both looking at the same screen, same TV, and you're just playing, right? There's almost zero, yes, practically zero latency, zero lag, because you two are very close to each other, right? The further you are, the more latency, the more lag, the more slippage, right? So that's the concept you need to wrap your head around, that you can actually reduce slippage through these ways, right? Of like getting good VPS that's near your broker server, stuff like that. All right. Okay, let me pause a bit. Of course, guys, if you have questions, please, I encourage you guys to send it through. All right, don't wait until the end before you send it through. I'll do my best to answer them. Okay. Now, the opening hours of Forex, right? Why is it a 24-hour market? How people are thinking, how in the world is Forex a 24-hour market? It's very simple, right? At the start of the day, right? Sydney gets up. In fact, Sydney gets up even if you're looking at GMT time like here, right? So when Sydney is up, Tokyo gets up slightly later, right? Tokyo gets up slightly later over here, right? So Sydney and Tokyo are awake in the morning just before Tokyo closes, right? You got London getting up, right? So this is that's actually pretty sweet spot. Tokyo London overlap, right? Actually, it's not just Tokyo, right? Many of the other countries out there, right? Asian countries, they overlap with London, like now, right? For us, Singapore. I'm based in Singapore. For anyone who wants to know, right? There's a little bit of overlap, so there's a little bit of trading volume, right? Before London closes, US wakes up, and this is the US London overlap. Very popular for a lot of trading volume, right? So we got a question from Darlington asking, what is the best time to trade, right? Very good question, right? And actually, my answer to that, what is the best time to trade, is that there's no best time to trade. Okay, there's no best time to trade. You trade when the market gives you the opportunity to trade. During these periods of time, you have more trading activity, right? There's more trading activity, but that does not mean you can only trade during that time, right? You might be able to find a trading strategy over here, and then the trade gets carried on all the way until here, right? Even though there's the most volume there, that does not mean it's the best time to trade. It just simply means the market is the most active there. You could take a trade, and then it might get triggered, when it reaches this time, but that doesn't mean that you don't trade. You only wait until, okay, the markets are open, like there's a US London overlap, time for me to trade. That does not mean it. It's in fact not best trading time, but it's actually most volume in trading, the most active trading time. It does not mean best. Okay, probably I will probably replace this with most active trading time. Okay, because I don't want to give you the idea that this time here and this time here are the best times to trade, because I've made a lot of money, right? Not trading these times, right? There are other ways to work around it. Okay, I hope that answered your question, Darlington. Now, moving on to the next one. Where's my PowerPoint slide over here? Moving on to the next one. How much time do you need to trade? Okay, so anyone want to take a guess? Right? Or can you guys share with me how much time do you guys usually allocate to trading every day? Right? Like how much time do you guys have to trade? Do you guys trade 1 hour a day? Do you guys trade 3 hours a day? Are any of you guys full-time traders trade 8 hours a day, 16 hours a day? Right? Can you guys send it in the chat section? How many hours, so the rest of you guys can see it too. How many of you guys, how much time you allocate to trading every day, so I can get a rough gauge on like what kind of strategies we can work on, we can look at together. Natalia, do you trade 24 hours or do you trade 2 to 4 hours? Not sure if you meant 24 hours, right? Right, we got Cyril, right? Trading an hour a day, right? Mahoda, wow, 8 hours a day, that's nice. Right, we got Lama, a day trader. Day traders, I guess, well, day trader is the trading strategy, but how much time do you have in a day to trade? It also depends, right? Right, we got Sarero, 5 hours is pretty decent, right? We got Kanaka, right? It's 5 hours. Derek, want to start trading only on New York session? I'll touch a little bit on that in a bit, right? 2 4 hours depends how busy your day is. All right, I got it, right? So I notice most of you guys got a couple of hours a day to trade, and that should form the basis of your trading strategy. Okay. Now, sometimes a lot of people ask me, what is the best trading strategy? Should I be a scalper? Should I be a day trader? Should I be a swing trader? Should I be a position trader? What kind of strategy will make me the most money, right? And I can share with you this, that there are many strategies that's going to make you money, but it has to suit your trading style. Right? If I told you that if you only had, like, for example, Natalia, right? If she only has 2 hours to trade in a day, and I recommend her a trading strategy that requires 8 hours of constant monitoring of the market trade, she's not going to do well, right? Because she's like, she only has the 2 hours, maybe 2 hours in the morning, 2 hours in the evening, right? Maybe you only got a little bit of time to trade. But how are you going to use that? If I told you that I have this trading strategy that requires you to trade 8, 10, 12 hours a day, right? You won't be able to do it, right? And there are trading strategies out there which only require you to put in 1 hour in the morning and 1 hour in the evening, right? You can be a profitable trader already. Different kind of trading styles, and it also needs to fit your kind of trading personality, your psychology, your risk tolerance level. For example, I've been trading for a long time, right? I have good trading psychology, right? But the problem with it is that, it still makes, I still find it very hard, right? I still find it very hard to hold a trade overnight, right? I still find it very hard to hold a trade overnight. When I take a trade, right, I sometimes wake up, I sometimes wake up in the middle of the night. I'm like, oh shoots, did I make money? Did I lose money? So I have dreams. I have nightmares sometimes. Nightmares, right? That I got stopped out. I sometimes wake up, it's like, did I, my subconscious in my mind, is running, thinking, did I make money? Did I lose money? Right? It keeps running, and it's so scary, right? That's a scary thing when you and I know when that happened that I cannot take trades that last longer. And that I cannot hold trades overnight. Even I know all the risk tolerance, I know all the trade management, I know risk management, I know all of that, right? But my risk tolerance, I just does not sit with me that I can take trades overnight. So I might want to be a swing trader, but my risk profile, right? The way I'm built is not able to be a swing trader. That's why I need to look at day trading. I need to look at scalping. I need to close off my trades within the day. Right. So then I need to look at trading strategies that suit my kind of personality. So that's a tricky thing, right? I can see Sheriff asking, I trade most midnight, right? Is it well, right? It depends which time of the day, which country you are from. I think if I'm not wrong, you mentioned previously, was it South Africa, right? One thing I want to recommend to you guys, right? Sometimes, it might not be a good idea to trade too late at night, right? Because think about it, our brain, right? Our brain is like a muscle, right? This is a little bit of trading psychology I want to share with you guys. Our brain is like a muscle, right? Have you ever exercised before? You're exercising, maybe you're doing bicep curls and stuff like that, right? You do the first 10, right? You can do it. It goes to 15, it gets a little bit tired. Do a little bit more, 20, your arms get really, really tired. And, the more you do it, the more tired your arms get. And it reach a point where you can't even raise up your arm anymore because you're so tired, right? And the brain is that way. You spend most of a day thinking, doing work, going to work, taking care of the family, cooking food, right? Taking care of the kids, driving around, right? And towards the end of the day, your mind, your mental processing power, right, is just not as strong as anymore, right? It's it's tired, right? It's like the brain is like a muscle. Have you ever came back at the end of the day and just like, man, I am exhausted. I just want a beer. I want to sit down, take a drink, relax my mind. I don't want it anymore. That is your mind. That is your mind being tired, right? So imagine your mind is being tired and it's the middle of the night and you want to start trading, right? That is actually pretty dangerous because the market is tough. People, the hedge fund traders, right? They go in with, they even meditate before they come in. Their mind is all bright and they really take on the markets, right? And they need to take it on with having that alertness, right? So sometimes it's a little bit tricky when you take on the market at night. There's nothing wrong with the time of the day we are trading it. It's more important like what is the state of your mind? Is it strong or is it weak? Are you tired or not? Because you're tired, you might compromise on your trading strategies. However, if you work the night shift, right, you're gonna trade in the middle of the night, then it's fine. You know what I mean? Right? Oh, okay. Africa, Uganda, not South Africa. No, sorry about that, right? But nice to see you tuning from Uganda, right? Yvonne is saying that it's getting yes, Yvonne, we will be uploading this on YouTube, right? So go check out the IronFX YouTube channel. I'll be showing you guys how to get access to it. So in case any of you guys have internet connection issues and drop out a bit, this recording, it won't be uploaded right away, but you can find it over there on YouTube. Okay, but how much time do you need to trade, right? So I got all the different answers coming in, right? But I want to share with you that scalpers usually you usually need the most time in the day to trade. Okay, scalpers need the most time in the day to trade, right? So we're talking anywhere in 4+ hours to trade. You need to dedicate that much time. Okay, swing traders, if you ask me, need anywhere from 30 minutes to 1 hour, right? You should not need too much time to trade. You look at the markets a little bit every day, should be enough. Okay, if you're a day trader, you need at least more than 1 hour to trade. You need to look at the markets at least 1 hour in the morning, 1 hour in the evening, so maybe a total of 2 hours, right? And if you're a position trader, maybe you don't need that much time. You just need 15 minutes every day. Check your charts, make sure everything is right. and it's for the, it's a long-term kind of thing. You don't need to dedicate that much time to trade. So depending on the time availability that you have, on the answers that you gave me earlier, right, it can give you two different, what's the word for it? It can give you two different kind of, not say two, four different kind of choices on like the kind of trading style that you want to use to trade, right? If you have a lot of time to trade, you can consider a combination of day trading, swing trading, like a dear friend Natalia, 2 to 4 hours. You can do a combination day trading, swing trading. You can even do position trading and scalping if you want. But if you only have that little bit of time, half an hour to trade, right, you might want to consider swing trading, right? You don't have that much time to trade, you might want to consider swing trading, you might want to consider position trading. We're going to teach you all these different kind of trading strategies which you can use in trading, right? And how you can apply it across the different time frames. Okay, so that's an important consideration to take note of. Okay, now I do want to touch a little bit on this concept on how much time it takes to master trading. Okay, a lot of you guys, I'm not sure how many of you guys, how long it has been since you guys have started trading, right? But I shared this a little bit at the start of the webinar. I want to share it again over here right now because I see a lot more, about double or triple more attendees have came in. That I'm a young guy. Okay, I'm a young guy. I'm 32 years old, right? I just became a dad 3.5 weeks ago, right? So I run an entire prop trading firm, right? Trading full time, right? And I do want to tell you that you can be a profitable trader. You don't need. I know I'm not here with like, in a big suit and stuff, right? Saying that I have 30 years in Bloomberg or Thomson Reuters and that you need all this experience to be a good trader, right? I'm here to tell you that, I've went down the path of blowing up account after account after account, total of about 7 accounts. I traded for a long time, many years, right? I think close to a decade. I learned the wrong stuff. I learned so much of the wrong stuff so that I can finally filter out and know what's the right stuff to learn, right? And I want to let you know that you can be a good trader in just 30 days, right? You can learn the correct knowledge in 30 days to be a good trader, but you just need to practice it. You need to practice, practice it to be a good trader, okay? Learning is one thing, trading is another thing. That's an important thing I want to let you know. Learning is one thing, theory is one thing, and trading is another thing. And that is why I want to take this opportunity to let you guys know that this new series we have with IronFX, thank you very much. Thank you very much, guys. Yeah. Thank you, Lama, right? Thank you, Sarun, Kumar, Sharif, right? Yeah, it's I'm now a dad, so not sure you can see my eye bags, but maybe tomorrow, maybe the day next week, you start seeing me have like really, really mad eye bags because oh man, I never knew a baby could have like, could drink that much, can poop that much, right? It's crazy, right? Now I'm able to even trade the US session because I'm stuck awake all night. But yeah, it's a bundle of joy, right? It's a 3.5 weeks, haven't reached his first month, right? So yeah, it's gonna be a fun time, right? But now it's important thing that I want to share with you guys too, that IronFX, we are dedicated, right, this to really, really helping you be a better trader. How are we gonna do that? What I'm teaching you today is the theoretical session. We're teaching you theory. But the great thing is that tomorrow we have a live trading session. Very exciting. Let me just show you how to get access to that. Okay. Live trading session. Bam, coming here. Right. I'm going to come here. You want to go to ironfx.com. Okay. You want to go to ironfx.com. You want to go to, and just let it load a bit. I believe it's, where is it? Schools. IronFX school webinar. Right. Webinar. You can see that does not look like me. Right. But yeah, you can come down here. Click on English. Live trading session tomorrow. Okay, live trading session tomorrow. That's where I take on the markets together. It's very, very exciting stuff. I'll actually share with you some of the juicy trades that I have found, right? I'll be showing you how we actually take on the markets. You'll be looking at the way I do charting, right? Do analysis, right? Do Fibonacci, retracements, extensions, expansion, support, resistance, trend line, right? Channels, right? Correlation. I'll be doing everything, right? You'll be watching me trade live, and you can also ask me if you have a request on euro dollar, you have a request on Aussie dollar, that'll be the perfect time where you can jump in. You can ask me, I can answer it, right? It happens same time, same place, right? I'm gonna copy this link address, I'm gonna send it to you guys, right? Same time, same place tomorrow. Please go register for it. Trust me, you're not gonna regret it. We're gonna look at the markets. It's literally living and breathing the markets, right? We're gonna look at it, we're gonna trade it. It's gonna be a fun time, right? Gonna look at some juicy setups, right? We have a hit rate, I have a hit rate of 70-80%, right? Pretty good hit rates, right? Which I hope that you know, the great thing is that all these webinars are recorded for you to review, right? I dare to do that, right? I dare to stick my neck out there, right? Call the trades. If it's profitable, right, that's great. You'll see me in next week's session, right? We celebrate it together. If I make the losing trade, that's part of trading, okay? But I will not run away from it, right? And that's the level of that's the level of accountability I hold myself to, right? And of course, this is another sneak preview which I'll be showing you guys right now, which is the IronFX VIP room. And how you can get access to it. I won't be giving you guys the link to it yet, but I want to show you how it looks like, right? Because we should be releasing this over the next either tomorrow or next week, right? And it's a VIP room, right? As long as you're IronFX client, you get access to this. I'm going to share the screen with you right now. Super awesome stuff, right? New share. Okay, here you go. This is the screen. This is the IronFX VIP room, right? It looks like it's like a chat room kind of area, right? Where you can come in, right? We have a whole gamified stuff over here. So the more you post, right, the more you chat, you will rise up the ranks, right? As you rise up more ranks, you know, we're going to give you different prizes, maybe give you different, like I have a lot of custom indicators I can give you there. But the important thing about this platform is that when you're IronFX client, and let's just say we're looking at euro dollar over here, right? We're looking at euro dollar over here. So I need to resize this, right? So imagine you have a question, right? You're looking at euro dollar and you're like, man, Desmond, is this a good time to buy, right? You come in here, you draw this support level over here, right? And you say, you know, hey, hey, Desmond, right? Is this a good support level, right? What support level am I referring to? Just need to highlight my text over here. Click on this button called link object to text. You will click on this button over here. Click on it. Okay, I'm referring to this horizontal ray, right? And go and click confirm. Now, what happens when you send this message through? Of course, you can see again a little bit of experience points up there, right? If I'm reading this message, or if you're reading this message, right, say, hey, Desmond, is this a good support level? All we need to do is to hover our mouse over this, and you can see it lights up. So I know exactly what you're referring to. So I can come into a little dedicated discussion with you, and I can say, yeah, you know, this happens to line up, right? Maybe this happens to line up with a, not sure you can see it. Yeah, it happens to line up with a 23% retracement, right? What 23% retracement? Highlight this, link it to this Fibonacci retracement. There you go, 23% retracement, right? Oh, sorry, and send the message through. So you look at this, you know, can light up. That is a 23% retracement I'm looking at, right? And we can have a whole dedicated discussion on this over here. So we have, we're going to support the majors, we're going to support the miners, we're going to support the commodities, the gold, the silver, the oil, right? We're going to support the indices. You know, it'll be a whole nice VIP room where you can get direct access to me, the other IronFX analysts out there. You get to ask us questions on the markets. You know, we got to answer you, right? But most importantly, you get to practice what you learn. Right, you get to practice what you learn here, you know, in the Tuesday sessions, right? In the next few sessions, you're going to talk about technical analysis, fundamental analysis, go on and on and on. You know, we'll cover more advanced topics along the way, but it'll be a fun time where we're gonna can I show you all the webinars, right? Yeah, no, I think we haven't added the rest yet, but this is a place where you can practice your analysis to be a good trader. Okay, right? I won't be giving you the link to it, right? Maybe you can tune in tomorrow or next week, and I'll be showing, if it's ready by then, we'll release it to you guys, right, to get access to it. Okay, pretty awesome stuff, right? Pretty awesome stuff. Okay, but now let me just bring ourselves back to this. How can I bring it back? Yeah, let me bring back to the screen over here, right? And what I want to show you guys next, right? What I want to show you guys next is yes, how much time it takes to master trading. What I'm trying to focus on here is that, yes, I'm going to teach you, right? You just need 30 days to learn the right stuff, but you need to practice it. Where to practice it? Practice it in the IronFX VIP room, which will be giving you access to, right? And that is how you take your trading to the next level, right? Because you can be practicing, but if you're practicing and applying it wrongly, you know, it's not going to help you in your journey to be a better trader, right? We're going to teach you how to do that, right? It's going to be a fun time. So Yeah, stick around with us, all right? Now, next thing I go to fundamental versus technical analysis, which is better, right? I do want to let you know that it's good to have a good understanding of both, right? Which will you choose? Depending on your trading strategy, it depends, right? Depending on your trading strategy, you might want to learn more fundamentals or you want to learn less fundamentals, okay? What do I mean by that? Okay, for example, if you are a scalper, right? If you're a scalper, right? Let me see. If you're a scalper, fundamental analysis is not that important to you, right? What do I mean by that? Let's just say you are bullish on gold, right? Your fundamental view is that because of all the uncertainty in the world, for a long time, this market correction, has been coming, right? The Russia-Ukraine war being dragged out, you are bullish on gold, right? You expect gold prices to rise over the next couple of years. Now, that knowledge is not going to help you trade the next 5 minutes. That knowledge is not going to help you trade the next 1 hour on gold. It doesn't really help you that much. It'll help you if you're a position trader and you take a long-term trade on gold. You're looking at a 1 week, 1 month chart and you're taking a long-term trade. Yeah, that makes sense, right? But that knowledge is not going to help you if you're going to just take, okay, is gold going to go up or down in the next 10 minutes, right? If I'm a scalper, right? That knowledge is not going to help you, honestly, right? So that's the important thing I want to tell you, right? Fundamental analysis, it's important, but it all depends a lot on your approach to trading. Fundamental analysis is more important for position trading and swing trading, less important for scalping and day trading. In fact, if you're scalping and day trading, man, you need to really, really be good in technical analysis. You need to be very good in technical analysis, right? You want to be a good day trader. You want to be a good scalper, right? If you're a position trader, you need to focus less on technicals, more on fundamentals. Okay, how fundamental analysis is useful as a scalper, right, is what we call this thing called known unknowns, right? So let's see if I have it over here. Okay, IronFX, right, platforms, economic calendar, right? IronFX has a great economic calendar, right? I want you to take a look at it, right? And this is what I call known unknowns and how you can use it in trading, right? So IronFX economic calendar, right, over here. Right, go close this thing off here. Right. Anyway, IronFX is now has this YouTube live event, live trading throughout the day. Great stuff. Go check it out. Right. Some people say they can't see my screen. Are you guys able to see my screen? All right. I'm not sure if you guys are able to see my screen. I'll go pause for a second here while I wait for your answers. Yes. Are you able to see the IronFX economic calendar screen? Cool. All right. Maybe I was clicking the wrong stuff earlier. All right, but yeah, so this is the economic calendar, right? So let's just say we want to know what's going to happen tomorrow. Or yeah, let's just say today, right? What you want to major thing you want to look at here is volume. Okay, volume. So imagine if I'm trading, right? There's a big news event on here, right? The GFK consumer confidence, right? Or let me see if there's any others for today, right? Okay, GFA consumer confidence, right? Dangerous stuff, right? There's a lot of volatility here. If I'm a trader, I'm a scalper, right? I might want to stay out of this currency, maybe the euro, right? Right before this, because I might be right on the trading direction, right? But because of the volatility, I might be wrong, right? Price might spike me out and I might get stopped out, right? So that's a dangerous thing, right? Or that's the important thing about so-called fundamental analysis, looking at the economic calendar and knowing when the big news release is going to happen. For example, the first Friday of every month is non-farm payroll, right? If you were a scalper and you tried to scalp some trades, not knowing that non-farm payroll announcement was going to come, right? You might be correct, but the non-farm payroll will just bam, go crazy. You get stopped out and you're like, whoa, what hit me, right? So known unknowns are important to be knowing when looking at the economic calendar will help you know when these news events are going to come and help you know when to avoid them, right? More important for scalpers. Day traders, the news events are a little bit more important, but it's very, very hard for you to predict, what the result is going to be, right? So as a day trader, I unless you're really crazy about econometrics, trying to forecast this kind of data, it's really, really tough to do that, right? What you do well is to also avoid, if your trade is almost at its profit target level and you're reaching a big news event, you might just want to close it off first, right? Because it's not worth it. The big news event might cause price to go in another direction, right? Might go against you, and it's just not worth it, right? You just want to close off your trade first. Okay, so that's the meaning of like fundamental analysis is useful, right? But how you actually apply is very different, right? Longer term trading, yes, it makes more sense, right? In our technical analysis and fundamental analysis 101, which we're going to cover in the next webinars, right? I'll actually be showing you a little bit more about how we won the awards that we won by doing combination of fundamental and technical analysis. Very exciting stuff there, okay? Of course, when it comes to trading, there are fundamentals. Basically, good economy means that money is going up. Bad economy means currency value is going down, okay? And of course, technical analysis, whole bunch of stuff, but I don't want to focus too much into that. There's harmonics, there's gun angles, there's moving average crossovers and stuff. A lot of stuff that you can do, but some of it I agree with, some of it I don't agree. Gun angles, I don't agree with, okay? It's based off astrology. It's literally you're looking at stars to trade. I believe a lot in harmonics. I believe a lot in Fibonacci. I believe a lot in market structure, correlation, support and resistance, Fibonacci, right? We'll be going through that very, very advanced courses, beginner, intermediate, advanced down the line. I'll be teaching you how to use that to make money, okay? I'll be teaching you how to use that to make money, right? But those will be in the upcoming webinars. Every week we'll be doing it. Sometimes it's me, sometimes it's going to be my other prop traders, Cassandra, and Annabelle, who will come and do it. But for starters, right, I'll let you know that fundamentals basically you're looking at like the health of a economy. Technicals is more towards like this kind of technical analysis, okay? And the last thing I want to touch on, right, which products should you focus on, right? Now, when it comes to trading, you can focus on a lot of stuff, right? So you notice that, of course, IronFX down here, when you talk about markets, there are so many different markets that you can trade, right? Where is it? You can trade Forex, metals, commodities, indices, futures, shares, a whole lot of different stuff. But remember guys, don't trade for the sake of trading. A lot of people trade for the sake of trading. Why is that wrong? What do I mean by that? Trade for the sake of making money. Trading is just a means to make that money. Okay, if there are no trades, don't trade. Okay, don't trade cryptocurrency because it's exciting. Trade cryptocurrency because it's going to make you money. Don't trade Tesla because it's the talk of the town. Trade Tesla because it's going to make you money. Remember what is your goal when you are trading. Okay, remember what is your goal when you're trading, because this is very, very important, right? This is very, very important when it comes to trading. All right, let me just see. Yes, yeah, it's very important when it comes to trading. You must know your intention. Okay, you must know your intention when it comes to trading, guys. Right? Now, which product should you trade? I'm going to focus a lot more on the liquid and on those products which are a little bit more liquid. Right? I'll be focusing a little bit more on Forex. Right? But you can just easily trade Forex and metals. Gold is usually a good one to trade. Right? Forex, right? Usually focus on the majors and the minors. I tend to stay away from the exotics. Indices, really good one is the DAX, German DAX, right? S&P, right? Nasdaq, pretty good ones. Commodities, soft commodities, I don't usually trade it. Shares are actually pretty good to trade, right? But I tend to look at the major ones, right? The big ones, right? I'll be showing you how to look at it in future sessions, right? No worries, Sharif, right? I'm sorry. Yeah, feel free to send the questions now, so I'll answer them before we end off today's webinar, right? But yeah, it's I'll be showing you these are a whole range of stuff you can trade, but that doesn't mean you should trade everything. Okay, guys, don't just jump in and trade everything. Okay, don't just jump in and trade everything, right? I'll be showing you some of the things that technical analysis tends to work better on certain pairs. Fundamental analysis tend to work better on certain kind of instruments. We'll be covering that in the future topics. Okay, yeah, but I hope you found this session useful, right? I hope you found this session useful, right? We actually covered most of the webinar already, right? If you have questions like Sharif, please send them before I head off, right? But yeah, please send them before I head off. I hope you found this webinar useful in helping you be a better trader, right? Just let me see something over here. Yeah, just listen. Okay. Yeah, I hope you found this webinar helpful in becoming a better trader, what I want to encourage you guys is to tune in into the live trading session tomorrow, right? There'll be a great time for us to look at the markets together. Come prepared with questions, right? On any technical analysis that you need help with, any fundamental analysis that you need help with, any currency pairs, any instruments that you're currently trading that you want a professional advice on, right? Come prepared with it, right? And we jump on and look at the markets together. Okay. Now, otherwise, guys, Sharif, I don't think I have the message come through, but if you always then I know whether your Forex Academy, please. Then I want to know whether you Forex Academy, please, because new. IronFX will be launching an academy in the next couple of weeks, right? So there'll be a pretty good academy. It'll be integrated maybe with the VIP room, right? I don't have a Forex Academy. I don't offer private training, right? We usually are institutions. I work directly with the institution. So usually if I invited guests, like for example, IronFX, right? They invite us, you know, a very special partnership with them. Then we come down and we teach you guys. Okay, I don't teach any other courses out there, right? Because I'm a full-time trader myself. I don't have time to teach courses, right? And I don't want to take your money, guys. Right? I don't want to take your money. I'm here on behalf of IronFX to teach you guys. So tune in, come on, man. Tune into the sessions, right? In the future sessions together. It'll be a fun time, right? It's free and it's very high quality. Okay, it's free, it's very high quality. And yeah, you know, you get to ask me all the questions that otherwise people pay us thousands of dollars per hour just to have a consultation with us. Otherwise, I don't think it's something you want to do, right? Just as long as you're a client with IronFX, you know, you get to benefit this, you know, you get a benefit from this arrangement that we have with them. All right. Anyway, thank you very much, guys, for sticking throughout this webinar.